Jon Williams with Manulife Securities and Williams Financial Group, and today I'd like to share with you a couple key highlights from our most recent client event called FlightPath. Now, before I do that, I'd like to explain what exactly it is. You see, we believe it's important to, at the very least twice a year, get together with our clients to talk about important information, tax consequences, ideas, things like that. And you see, the reason why we use the analogy of FlightPath is when you ultimately are setting a destination as a pilot and you take off, your work is not done. In fact, it's just begun. Because as soon as you take off, you have to be constantly readjusting and recalculating due to wind, weather, and sometimes even making avoidance measures like avoiding large thunderstorms and things like that. And I think it's a great analogy to financial planning and setting goals, because ultimately we write down what your financial goals are, but that's where the work has just begun. We need to be monitoring and constantly making changes as we go along to ensure that clients reach those financial goals. With that, I hope you enjoy our highlights and have a great day.
And my dad is really handsome. He's right over there with a lot of guys in suits.
So with that, please help me in welcoming Dr. Anderson.
So how do we, as professional investors, stand back from a lot of the noise that goes on in a lot of the newspapers and the CNBC and the BNNs of the world? And I'm going to share with you 3 simple things that we ask ourselves when things look very, very, very dark. So, I always say to them, what's the best way to get a deal on anything you buy? Because they love deals. Then you can actually, if you think about it, when you buy a stock, you are buying ownership in that company. A small percentage of that revenue is actually coming back to you. You're paying less for your goods and services. 4 is a portfolio can be thought of as a company. Most people just think it's a mishmash of stocks. But if you can actually think of your portfolio as a company, the portfolio can be thought of as a conglomerate. And all you're doing is when you're putting your portfolio together, you're buying an ownership in a company. So what do you want to do? You start thinking differently. You want to make sure that that ownership in the company doesn't all come from one source. You don't want it all to be in oil and gas. Why? Because you may actually have a lot more volatile earnings stream. You can actually diversify by the underlying businesses. You can effectively do what Warren Buffett does in your own personal portfolios.
So with that, what our job is to help clients set their long-term financial goals and ultimately help guide them and maintain that focus on those. And I hope today that you learned a little bit about the in-depth analysis that asset managers do when they go into buying companies, that if you see a mutual fund and it just says it's a mutual fund, it's not that they just randomly buy companies. There's a lot of work that goes in behind them. So I wanted to give you a little bit of that information. But ultimately, again, it's about setting goals, which is the simple part, but it's the trip along the way can sometimes be volatile, but that's where we're here to help. So with that, I'm going to wrap up because simple doesn't mean easy. We're here for you. Thank you.